Welcome to Screw the Stock Market. On this show, we discuss a variety of alternative asset classes, tools to help you unleash your money, a success mindset, and inspiration to see what's possible when we do things differently.
Aziz, how awesome was that interview?
Oh, today's interview was awesome. It was great. It was definitely great. Yeah. So, just a quick disclaimer. For those of you who are just passive investors that don't want to get into the nitty-gritty and the weeds, today's interview might not be your thing, just because it's a very technical interview. But for those of you who are in the capital raising or private equity or entrepreneurial space, venture capital, this is a great interview. Today we're talking to Oscar Jofre, who is a serial entrepreneur. He's been all over the tech space. He started off working with the founder of Best Buy at one point at the very beginning before it took off, and just had a long streaming career in that startup world. Went on to create his own startups, and now is leading a really innovative company that basically helps capital raisers and different startups basically build up their capacity to make the most out of the Securities and Exchange regulations to raise the most amount of capital possible and really streamline their processes. It's like mind-blowing the type of stuff and the flexibilities that the regulations allow that his company is able to help you utilize. It was just a great, as capital raisers, it was a great interview for us.
It was, yeah, selfishly. But I think the other part of it that's just really exciting is obviously the values, right? This is all about democratizing access to the most innovative, high growth opportunities that there are as an investor, and the idea that this can be done and made available to anyone in the whole country is awesome, because you and I have been on the other side where we have to say, sorry, you don't qualify for this, or sorry, minimum investment of $50,000, and someone says, I have 10,000, isn't that worth anything? And the answer is yes. But
he said as low as $100. It doesn't matter.
Exactly, yeah. And so that's awesome that people can invest small amounts, which has been one of our running themes. One of the biggest problems that I've been trying to figure out on this show all along is, where are the asset classes that you can invest small amounts in that are not in the stock market? And
that are accessible to everyone.
Here we have one of the best. And this isn't a specific asset class, but it's a whole entire type of regulation. It's not an asset class, it's an investment vehicle, maybe, that we could call it.
Yeah, like an investment approach or vehicle that you can use, using special aspects and special loopholes within the regulations. And I think one of the things that resonated, beyond just the technical part of the conversation, one, he's a cool dude. He's just a generally down-to-earth, very easy to talk to, generally humble individual. But he also has a passion for kind of utilizing this knowledge and these resources to uplift our communities, like minority groups, immigrant groups, people who don't have the reach and the access to a lot of these good old boy networks of ultra wealthy elites, and can get these backdoor access to these types of deals because your great grandfather was a board member in Coca-Cola back in the good old golden times or whatever.
But yes.
Yeah. And funny enough, Alex, one of our mutual friends, that was her grandfather.
Really? Oh, tell me after we get off the call.
Yeah. But yeah, so those are the types of things that he's really passionate about, just opening up the doors for people that look like us, in a sense, and getting them access to those opportunities.
He said that it's actually better. He gave a few examples about how it's actually more likely that minorities and women raise more money through this method than they do when they go through the traditional capital raising processes.
Yeah,
the point
it's
is
significant
awesome
amounts
values.
too. It's not even like small numbers, multi-millions.
Yeah, hundreds of millions and billions, he said a few times. But the point is, values are awesome. And again, Aziz and I, we have that vision, right? Let's try to make these alternative assets the default. Let's try to make this accessible to as many people as we can. And so that's, I think, really the root cause of why we're so excited about this interview, is because this is a tool that I knew existed, but I didn't understand how accessible and how powerful it was to actually achieving that goal. Don't be surprised if you hear about Aziz and I doing some Regulation A or some regulation, what was the other one called? CHB, whatever. We're going to do some reading and figure this out.
There's a lot of letters.
Yeah, there's a lot of letters.
There's a lot of reading.
CF.
CF, there we go.
But anyways, the point is, We're going to learn about this stuff, and we're going to dive in. We're going to keep you guys informed, and thanks for tuning in. This is awesome.
Yeah. Hope you enjoyed the interview.
Hi there. Thank you so much for tuning into the show. We work really hard to create a lot of content that is educational and informative. And we also want to be the best listeners out there. We want to understand what you are interested in, what kind of investor you are, what your objectives are. And so we've created a survey at screwthestockmarket.com/survey. And there you'll be able to take the quick survey, and we'll be in listening. And that'll help us be able to create better content and we can engage more about how we can help you achieve your goals. So again, screwthestockmarket.com/survey. Hello everyone, welcome to Screw the Stock Market. This is the show where we talk about investing and building wealth outside of the traditional stock market with the aim of taking control of our finances and our futures and our lives. And so today we have a very special guest, Oscar Jofre. Is that correct pronunciation?
100%. Yes.
All right.
Yes.
So, Oscar, we're really happy to have you on the show today. Oscar is going to talk to us a little bit about a bunch of different stuff. We got private equity, we got innovation, we got team building, we got AI. All these things are happening and they're all intermixed. But before we get into all of that, why don't we start with just a little bit of your personal story of where you came from and how you got to where you are. And then we'll jump into that fun stuff afterwards.
The last time I told that story, that was an hour and a half, but I'll give the abbreviated version. I was born in Santiago, Chile, and we immigrated, not directly, into Canada, Edmonton, Alberta. That's where I ended up in my last spot when I landed in here. It took us about 2.5 years to get here. It was a rough journey. It was during the coup of Chile, if people who read history. That was the reason why we ended up here. And coming from South America at the time where I had never seen winter before, and then arriving in Canada where winter really happens, it was a bit of a shocker. But it was an interesting time. It was interesting and difficult. It was difficult because for the very first time where we resided, immigrants are coming in. And it wasn't just us. It was people from China, India, different cultures globally. And it was difficult as well because at the age, I came at the age of 10. So it was a little bit easier for my sisters, I think, but for me, I found it difficult. I went through the school system with nobody noticing whether I actually knew how to read and write. And I didn't till I was about 18. So that's when I finally, after the school, I didn't graduate high school. I'm not disappointed by it. I don't regret it. It just, for me, I don't blame the system. The system just wasn't ready. We didn't have ESL as a second language system or anything like that. It just wasn't equipped. But so how do I go from that to where I am today? For me, I get asked this question a lot, and it's not that I read a book about it or anything. I think it was just already inside of me. And I go back to a very early age. I was 8 years old in Mendoza in Argentina while my parents were sleeping in a siesta. I was sneaking out of the hotel room to go pick up luggage from the taxis arriving from Santiago to sell the newspaper, the most valuable asset people wanted in those days. So that's as far as I go back when I was already working, earning, and seeing the value. When I finally decided to go and learn, it was because it was already in my brain. As an entrepreneur, you got to get used to the word learn. And that just propelled me. And the journey was that I only worked for 2 companies in my entire life, professionally. 2 companies which 2 amazing founders taught me so much that it allowed me to take my wings in. But I knew the first company I worked for about 3 years. It taught me quite a bit, team building, positive thinking, anything's possible, which was fantastic. And he was Iranian. Mm-hmm. There's no better, Zia was, and who was Zia? Well, he was the creator of Best Buy.
Oh, wow.
So Best Buy, a multi-billion-dollar corporation. I was right there when the first stores were being built. They were called Future Shop at the time. And he took a young kid, immigrant, and said, if you believe it, it will happen. And it did. I went from selling to running a store. And when you can start believing in yourself, it's amazing. And then I moved on to another company, and I spent 3 years there, and it taught me a very different type of selling, but nevertheless, it was in the same impact, meaning positive. And it was at this company that I saw my opportunity, and that's when I became entrenched with computers. I was already getting entrenched in the early 80s, around 88, so it was really exciting seeing it, big boxes, and you guys may not remember this, but they were heavy machines. But I saw something at an event in Las Vegas that was it for me. It was, this is it, because not everybody knows how to type. I figured voice recognition was going to be the holy grail, and it really was. I remember the tagline, voice recognition, the holy grail. And you have to imagine this in 1990. Look where we are today. And it was really exciting. It was an exciting journey. I went to my employer. I said, this is what I'm interested in doing. Would you like to do it? And they said, no. Okay, I'm now leaving. I don't know why I did that. I cannot tell you that I read somewhere that you should go and tell them, but I don't know. I felt that maybe because it was on their dime that I ended up meeting these people or something, but they didn't want to have anything to do with computers. They felt that computers was not the future. Obviously, I had a very different. So I left, I had nothing, I didn't save anything. Yeah. Oh, 1990s were exciting times.
Out of the .com.
People done, yeah, prior to .com, there were a lot of people that didn't believe in computers, so that was one side of it. Companies said, no, this is how we do business, and computers are not going to intersect. And so that was one. The other ones where they were frightened of it. I remember articles showing up where, oh my goodness, this accounting software is going to destroy the accountants. We're going to see less than half the accounts we have today. And ironically enough, now we have 10 times as more accounts. It's amazing perception.
Now, I can really already see how this is going to connect to our conversation about AI. So I just want to say that now, but I don't want to cut you off. Let's keep going.
Yeah, it's all interlinked because we need the historical path to understand human behavior. We need to know the impacts because AI has been around since the 60s. This is not new. It's just that it was done in ways in order to slowly bring it in because people don't want to know that somebody else knows the answer better than you do. Think about that, right? We're already frightened when we're already in a room sometimes smarter with another person. It takes courage, it does, to stand there and be humble enough to say, this person is amazing. We're not just talking smart, we're talking majorly smart. There's not that many people like that where you're at awe. And so when you meet them, you're just boom. So for me, it's been like that. I've been so fortunate as an individual with no education that all around, I look back now, you make me think about my very first startup. I was involved with PhDs, Ray Kurzweil, Dr. Janet Baker. Like right from the get-go, I got involved with people that were 100 times smarter than me, but I could understand it from a very basic level. We're going to help people communicate with computers without them doing anything further than putting a headset on and talk. Yes, they needed to speak a little differently at the time, but that was the goal. And we also needed to go and say, it wasn't for everybody yet, we needed to go finite. So we focused on lawyers and a few others. But it was an exciting journey. But at the same time, as much as it was a great hype, boom, you lose it all in just 3-4 years for market and so on. But you continue, you don't stop. So my journey has just been an evolution of that journey, which was I didn't go out and build software for accounting. It was just bigger. Voice was to solve a problem that would help others. And then as I emerged, my next one after that was Babelfish. Babelfish, again, was not something I was looking for. It's just there. And the internet is coming in, 1998, 99. We're reading in the media everywhere. But there was something missing. My mom couldn't use the internet. So the average parent, like if you're an immigrant, your parents in the early 90s couldn't use the internet. And it wasn't that they didn't know how to use a computer. It was that they'd only spoken English. So they were completely out of the internet in the early days. So we know we needed a tool, and then not only having the sites in those languages, but how do people communicate from different worlds? In those days, it was called ICQ. Nobody remembers the ICQ days, but
I remember.
ICQ was one of the first tools that it started connecting people from all over the world. It was an Israeli communication tool, and it was great. Hola, hello, привет, ni hao. all of that. That was, and it's amazing what hello does when you talk to people. Hello. You just, hello. It starts, in fact, my hello ended up, I met my wife and I got married. My first marriage. It has a theme to it. Yeah, so Babelfish was my second journey. And through that you learn, you're putting together a very complex problem solving, and through the next journey it's just an evolution. So my next company after that, it became, through the exit of that company, I ended up getting into trouble with the Securities Commission. Not deliberately. Here I am relaxing and I'm getting a letter from the Securities Commission that you've omitted some information in your filings. And at that time, as a young entrepreneur, I relied on everything that I was taught to do. My lawyer. So you go to your lawyer, you go, excuse me, what's going on here? And he goes, it just so happens, one of the documents we submitted, we've omitted this information. Yes, but we gave you, that was already in the minute book. You had it. Yes, but it was your responsibility to read it.
What are we paying
Thank
you for?
you. Interesting enough, you paid them to create it. You didn't pay them to be smart people. But nevertheless, I do love lawyers. I do. This didn't discourage me from working for them, but it taught me that we needed a different path. But what was really interesting, at the time, 5 of us, board of directors of the company, paid a fine. We were not sanctioned. So there's a big difference between a sanction and a fine. But as an entrepreneur, I didn't stop there. I'm sitting there and I'm going, okay, we each paid $3,500. That's $15,000. Here's a person on the call doing the investigation. And after the call, I said, so I noticed we paid for the fine. Who didn't pay for the fine? And he goes, your lawyer didn't. I said, why is that? He created it. We showed you that. And he goes, yeah, I know, but every email had a legal disclaimer. Thank you. All right. So obviously I'm not entitled to that legal disclaimer, but nevertheless. So I didn't stop there. I said, okay, so this must be very rare, right? Oh, God, no. He goes, we generate $14-15 million in annual for this. And this is a very regionally based securities commission. And I'm going, excuse me? Goes, oh yeah, my God, yours is nothing. Oh yeah. And I'm going, how big is it? He goes, every single day I deal with 300 to 400 companies with fines like yours. But we just make simple, I know, but it's our job. And I go, I get it. And that became my next venture. My next venture came out of noticing that as entrepreneurs, we were blindly walking through the lanes, not paying attention and relying on professionals, which we need. But ultimately, the message I tell people to this day, they don't pay your fines. They do not pay your fines. So as I start learning that, I move into the boardroom, because that's where it matters. The board of directors come, Enron collapses. You guys remember that? Yeah. Enron collapses. The fraud, keeping the directors in line, and so on. So, the product I was building was to bring all that together. And the public markets are, how should I say it? 3 different sides. There are companies that should be public because it brings value and there's an opportunity for people. But the vast majority of them, my goodness, what I saw with my eyes, I am just shocked. So Bre-X is perfect. Bre-X, if you guys don't know the story, whether the stock market screwed people or not, this one's perfect. People coming at a nickel, goes up to $300, there's no gold. Seriously, how does that happen? Now, the regulators came in place, they did some fixing up, requiring some filings and third-party validation, so it won't happen again. That was supposed to be. But then again, it happened with Sino Forest. Where's the trees? It's a continual element. But more importantly, was that it was so easy for these companies to receive capital. So in my 10 years working in the public markets, here's what I saw. I saw CEOs on a Thursday night at the financial district coming out partying. Yay, guys, we did it. Alex, we did it. Aziz, we got $15 million. Okay, $15 million for a project to, I don't know, get copper, gold, whatever it is. And right there, they're laying out the bottles with wine bottles with their name on it, golf clubs, and everybody's drinking it up. And at the first year, I'm going, okay, this is pretty cool. They're celebrating, it's all right. But then you watch each company burn the capital and go back to the same brokers, and the brokers give them the money, and so there. And I'm going, what am I missing here? And the missing piece is that those CEOs, those executives had no connection to me. And what does that mean? I'm sitting in my home pumping in $500, $1,000, hearing a story from a broker that this is a grandiose idea. They don't know who I am. All they want is start broken, get the squad of money and burn it like I said it was $5, $10. No connectivity to me, no responsibility to me as a shareholder other than the regulatory responsibility. So that's why it's rigged in some ways, because they're in the end, I'm not. And so that's going on, and boom, the 2008 collapse occurs. I happen to be in Canada, so we got to see it from the outside. So I'd be lying to you if I said, oh, I saw it coming. Not at all. Did I feel it? I pinched a bit. But it's what came after that really changed my life. I met a man that really changed everything that I've done. His name is David Weil IV. David Weil was the former vice chairman of NASDAQ, and today he is considered the father of the Jobs Act in the United States by Congress, all parties. So what did David do? David fundamentally changed the way we as companies and investors can participate. And he based it all on the title of your podcast. The stock market is screwed. It's not for the everyday investor. The everyday investor is not going to be able to make money in the market the way the rest of the players are making. That's a foolish goal. It's go to the Middle East. Look, gold. It's just sand glowing. And I didn't know this. I did not know this. I was blind. But I would go, David, public companies create jobs. Another myth. But David, and he just made it clear. Public companies do not create jobs. They create wealth. And let's be clear, where it creates wealth, it's not to you, it's the 1%ers. And I'm like, wow. What America lost and other countries followed, and that's why it's important, is that we needed to put it back exactly where it belonged. And that's where democratization came in. It's a big word for people to understand. Democratization is about equality and accessibility, meaning that everybody needs to have an even chance to be able to participate. So whether you're white, Hispanic, Asian, it doesn't matter. If you were not part of that 1%, you weren't getting the deals. Did you get LinkedIn? Did you get Twitter? Did you get all those deals before? No. And maybe you did qualify, maybe you didn't, but you're not part of that club. So you had to be part of a club to make the money. And the evidence was there. The evidence was that all the wealth, and if you didn't know this, all the wealth, there's some exceptions to the rule, but all those exemptions are to the vast majority, and meaning exemptions of companies like Apple, Google, and others, where if you hold it for a long period of time, 20, 30 years, it's there. But the vast majority of wealth is made when companies are private. And that was the response to how to fix. In order to fix the public markets, you needed to fix the private. So what was that happened in 2008? Maybe you know this and you have it, but it was Middle America lost everything. So people, listen to this, Middle America, everybody in the middle, not just the poor, just middle. And guess who didn't? The bankers. Not only did they walk out with cash, they got a bonus. And you need to be reminded of that year in and year out. And that was in the media. You may all recall. They were getting bonuses. It got a little bit of headlines and then it got buried. So that's what David reminded us all, that that's what it was about, money. And that's okay. But that's not innovation. That's not creating jobs. So when President Obama brought in the Jobs Act, it changed everything. It changed everything. And how did it change everything? Because there was another rule that I didn't know. And this one was the one that just... So I grew up in the notion that if I didn't get venture capital money, I was no good as a company. That was number one. And number two, venture capitalists are the only people that have money. And hear me what I'm saying. Venture capitalists are the only ones that have money. And people go, and I keep repeating that to people. So you think they have money. It's their money out of their own pocket and all that. Again, education. As I learned, in the United States at any given time is $36 trillion. $36 trillion is being held by 233 million Americans in the United States. And the myth that we have been sold is that this little group of venture private equity group are the only ones holding all the capital. They're not. It's actually not even their capital. It's everyday mom and dad who put their money on a fund or give it to someone to manage for them. And indirectly, it's really funny. Watch this. You give them your money to go out and make money, and you get a small return. And then they bring you the very same deal that you can go out and play with your money, and they take it back from you again. It's a really interesting
Wait, say that again?
dynamic.
So we, as an individual, regular person, would give their money to a venture capitalist fund?
No, not a VC, a fund. Imagine, Alex, how many people every day to other people to manage your money.
Okay. And then they would take that, grow it into a company, go public, and then they'd sell it back to you again, but now it's a public company in the stock market, is what you're saying.
Yeah, and they already made the tenfold, but you only get a small percentage. They take the biggest gain. Have you ever seen how much money they get paid on? They used your money. Okay, Alex, give me $1 million. Okay, I'll give you 1%, or I'll give you 3% on that money. Oh, thank you. Thank you. Because, Alex, you can't go and invest your money, so you can only give it to us. And you're like, okay, I got no choice. I'm going to take your $1 million, and I'm going to make it into 100, but I'm only going to give you 3%. Mm-hmm. And not only that, after that, you go, wow, I can go buy that stock. I just made all the money. This is the reminder we all need to know. This is what we all need to understand. I was naive. I was an immigrant. I didn't know how money worked. I didn't know, and now that I do. So what did President Obama give us? It gave us a gift. I'm a Canadian, and I tell everybody it is the best gift ever in the world, because democratization meant that not only does private equity go after that individual to get them to put their money, now they got competition. See, money didn't have to compete before. Money already went to you and said, hey, Alex, you don't qualify for that, so you got to put your money here. And now, hey, Alex, guess what? You do qualify. Would you like to put your money directly? See? That's a choice. You didn't have a choice before. A choice you were stuck before is 99% everybody was in the same bucket. You don't qualify. And the qualifications are so outrageous that only a very small percentage of people make it. A very small percentage. That's why they're called the 1%ers, for that reason. Regulators created those rules to make sure, they call it to safety net to everyone. But keep in mind, Wall Street, Bay Street, whatever street, anywhere in the world, they want those rules. They want to limit. They don't want to go after 1 million people. They want to only go after 100,000. Why? And let them go after the 1 million and sell it as a product and see how it fits. Ultimately, it's still mama and papa giving away $500, $1,000 a month and say, look, we're getting a good return, honey. We're getting 5%. It's a solid 5% return. Of course it is. Man, they could give you 10% ongoing, and they'll still make more money and still have tons of losses. All they need is one, but you never got to participate in that one. Now you do. So the Jobs Act did that, democratization. So allowing everybody to participate. So now it doesn't matter if you're white, Hispanic, Asian, didn't matter. You can equally use the regulations, fully compliant with the SEC, and raise money from anyone in the United States, including other countries. So that means as long as you were 18 years of age, you could invest as low as whatever the company wanted, maybe $10, maybe $100, $500, whatever it was. And the people at the beginning, money dismissed it. Oh, it's going to be full of fraud. What do you do when somebody comes after you? You do a knee-jerk reaction, right? If I said to you guys, I got a competitor, oh, they're not as good as us, and I don't do this, they don't have me, and agreed. So knee-jerk reaction was you had to get spit on a lot. So in the early days, I had to deal with that. I'd be in panels with venture capitalists. They would say to me, who in their right mind would ever want to have 5,000 shareholders in their company, these retail investors? They're going to be nothing more than annoying. And I would respond back in the panel, I find that ironically, because when I was at your office, the first thing that your people asked me for was how many customers I have. And I go, yes, that's important. I go, I know. I just gave you an answer. And he'd go, no, I'm talking about shareholders. I know, and I'm talking about customers. They've never put the two and two together. Why can't they both be the same people? See, because in their mind, you, the customer, had never been given the chance, ever. So imagine today you can go to the store and feel that you own a share of it, and you can participate in the early days. That's what this was. So in the early days, it was tough. The Barack Obama son did in April 2012. It took a bit of time to get started. 3 years later, we finally got some securities regulations around it by the regulators. The first year, when it came out, it wasn't that big, and people were laughing at it still. Oh, this is just going to be full of fraud. It's going to be jokers. It's going to be early stage companies nobody wants. Nobody wants any of this stuff. Okay, we all marched on. Here we are, 2023. So what impact have we done? To give you an example of dollars, so the public markets in 2023 did $2.1 trillion in capital raising. And the private markets, $4.5 trillion. The private markets is growing at a rate is 6 times greater than any other. The Milken Institute, by the way, the recent event in California, the entire sessions were about the private capital markets. Money is coming this way, but it's coming down differently. The markets is growing. Out of that 4.5 trillion, what impact did the Jobs Act have? 151 billion. And that's a big number. I know 4.5 is big, but keep in mind that in 2012, that same number, we were zero. We were zero. That means 0 Americans got to participate. Here we are at 151 billion. We've now got over 10 million Americans that in the past never had a chance to participate.
I want to stop you real quick because I want to make sure I understand. Aziz and I, we've done Regulation D, 506B, 506C, capital raising.
Oh.
But what I think you're talking about is the Regulation A, where it's like...
Regulation A plus and Regulation CF. Okay. The holy grail of the regulation. I'm gathering you guys are in the real estate market, correct. Right? So that's why you're using those. I have a lot of real estate companies I work with that are shifting. Big names, the 10X people and all that, they're shifting. And here's why. Because not only did so keep in mind, so I'm going to go back to the Jobs Act again. What did David Weil create? So he understood innovation was here. We understood that middle America lost everything. The bankers made the money. You lost your company. Everything you built, gone. And again, another reminder, public companies don't create jobs and they don't create innovation. Every quarter, what do? They're slashing jobs to meet the numbers, right? Because supposedly investors are putting the pressure and all that. It's not the investors, it's the people in between for various reasons. Private market, we needed to make sure, number one, the innovators stayed on. See, number one. Number two, we wanted democratization. We wanted everybody to participate. Number three, we wanted to make sure that investors would have the opportunity to be able to move because the stigma with private markets, once you're in, like in what you're selling, you're in for a lockdown, maybe a minimum a year, but it could be 5, 10. These regulations were created in such a way to provide the ability for liquidity. Okay, liquidity.
So there's secondary markets for the
secondary market trading. Okay. Here's the
just
interesting
real quick,
thing.
Before you explain it, I want you to say it. I just want to explain. When someone has invested with us, we'll take that money and we'll put it as a down payment on a larger apartment building. And so if a year later or 6 months later, the investor comes back and says, Alex, I need that money because I need to replace the roof on my house. I don't actually have the money. It's in the apartment. So I can't give it back. So whenever someone invests with us, we need to say, hey, we need to make sure you don't need this money urgently. I want you to invest money that you aren't planning on getting back anytime soon. I need patience.
There's a time period in which you will get your money back. And it's based on how the deal is set up. Sometimes it could be, if it's a short-term deal, it could be like maybe 2 years, something like that. If it's a little bit longer, it could be 5 years. Yes. You'll get your money back, but it'll be at that point. But in the meantime, in between, you're getting percentages from the property's income that it's earning each year. And then you get a big payout at the end with your initial investment and then the sale of the property, big percentage of that as well.
And so the big problem with that is that there's no secondary market. You can't get your money from me, but ideally it would be cool if you could go to someone else, go to your uncle or your friend down the street and say, hey, I have these shares of ownership in this apartment with Alex and Aziz, but I need my money back. You want to buy it for me? And you could track
actually,
right?
And
so what you're saying is that...
I'm going to put my regulated hat there to give you a bit of a regulation, because that's the mistake everybody makes in Regulation D, 506Cs and Bs. So those securities can only be traded between accredited investors. So I'm still out. Even though you bought them and I'm still out, you can't allow that. And Rule 144 has further restrictions. So the reason you don't see trading in secondary market trading is because companies have first of all, the regulation has a 1-year hold, but some other companies even put additional holds. Like mine has got a 5-year hold. So you can add as many holds as you like. And so the investor's in it for the long haul. Do you see what I mean? They're in it for the long haul. But even if after a year you say, okay, it's released, in order for that to occur, there's so much paper where people go, oh my God, you know what, I'm not even going to bother with it. So that's why in the Reg D world, prior to the Jobs Act coming in, it didn't happen. It didn't fly. Now we move into the Reg CF and the Reg A. So Reg CF is a regulation that allows companies to raise $5 million. Some people say in real estate, Oscar, that's not a lot. I would argue, because I've met companies who do these Starbucks islands. They're about $1.5 million to $2 million. So $5 million allows you to build 2 of them. Then there's the other regulation that allows you to raise up to $75 million, and you can do, again, quite a bit. I realize it's not the big projects, but every few years the regulators keep changing then the limit. And now they're already talking about bringing this to $150 million. So you can imagine real estate is going to be a big play. So why is this so important? Because in real estate, you already put the capital in to work, and it needs to work. But I own a security, and I should have the freedom if I need to, if I have to do it. And ironically enough, it's interesting. People have been making roar, I need secondary market trading otherwise, or I need my shares free trading because I won't invest in your company unless I have it. Okay, now you have it. Nobody trades. People go, what's going on? It's because it's like a feature in a car, and it's a feature in anything. When you don't have it, you want it. But now that you have it, so it's been here now since 2012, and I can tell you secondary market, but it's nice to know that investors have that choice. But I'm going to give you some examples in real estate, how companies are using it, which I think are phenomenal. Companies like Gratis Funds and Phoenix. So Gratis Funds is doing really interesting. It's using the regulation, targeting accredited investors to buy these securities. Minimum investments are $100,000. People go, that's not for everyday people. I know, I agree with that. But they made it, and they can make the minimum anything. And then I have another company with the minimum is $500, and another one $100. So the minimum could be set at any amount. But what was really interesting about Gratis Funds, it was targeting an audience that it has had for years that's used to dropping 100,000, 250,000, but it had one thing that it couldn't do before that it can do now. The investors had no way of having liquidity or taking the securities. I really want to buy this, but I want to gift it to my son, my daughter, if anything happened. They couldn't do that. So these people are buying large blocks of securities and then, boom, transferring them, which again, in Reg D, you can, but in Reg A's and Reg CF, you can. So it's about understanding what it did. It allowed, so what does it do for the company? It takes all the pressure off you. You don't have to worry. You're not restricting you or anything. And plus, there's a third-party administrator of the securities, a transfer agent, which the company has real time, the investors have real time. Again, what are we using now? Technology. Technology and regulations coming in harmony to be able to democratize the millions and millions of individuals who want to be able to participate. And that is what's happening. And that equality is everything. In real estate today, it's not equal. It's not equal today. When people read about real estate, only the wealthy make it. That's it. That's it. It's only not the 1%ers anymore. You went from the 1%ers to the 5%ers. Why? Because they need to, under the 506C rule, they need to be an accredited investor. And there's only so many ways they can be an accredited investor, either income or asset verification or the register and all that. That only accounts for less than 5% of the overall population of the United States. So so all you did was just you expanded this group, but you didn't expand this group. Regulation CF and Regulation A balanced the wheels. That's what it did. That's democratization. So coming back to the beginning, everybody's saying it's going to be full of fraud. There has been more fraud committed in the public markets with no punishments versus the private. And I'm happy to say that in the private, in the Jobs Act regulations, there have only been 2 incidents, and in both cases, the SEC caught it really quickly. And here is why they catch them so quickly. Because everything is transparent. You and the company are directly connected. Anybody can detect things because you're not disconnected by an intermediary who's blocking you from accessibility to the information. Whatever's being put out, you're seeing it real time because that's one of the requirements. So it's a level playing field. You have internet, great. You have a phone, great. You now have access to information. You can make the same decision, the person over here, and you're both making, there's no speed to it. It's $5.50 a share, you buy $5.50 a share. And you're both buying it on the same information. One is not getting anything more than the other. And if you see something fishy, boom, you get an immediate out where you can take it because there's a FINRA broker-dealer involved. That's what is so great. There's nothing better than in a structure for democratization that protects the investors and protects the innovators. The innovators are me and you. We need protection. People, what do you mean? We need protection from losing our company.
So I have a quick question.
People.
So
yes, sir.
Now you were talking about before in terms of how the secondary derivative markets are now able to be created based on these like long hold, either venture capital or real estate deals or whatever it is. What's the incentive for the deal creators to do that? I think setting up that system, wouldn't that be additional costs and in terms of getting together with the right type of people, the setups, the regulations, and all that stuff to create that secondary derivative market, as opposed to just sticking with what they've always done, which is sticking to their normal pool of investors? What's the incentive?
It's not so much that there's nothing for you to create. It's already being created for you. In 2012, we had maybe 5 or 6 secondary markets, dark pool, only for the ultra rich to trade. See, that's what I mean. It's always been there, but it's only been available. And now we have over 70 issued licenses. So it's not you need to build it. It's that your investors will come to you and say, hey, listen, I'm going to invest with the other fund. I like yours, but this one, if I have to trade, I can trade it. And so so that's what I said, it becomes a feature.
Okay.
See, the thing about human beings is that when they have it and you don't, and that's what people are going to be going through. So that's how you democratize. You provide choices. Today, this is your only choice. So if you're a sponsor, you're a builder, that's not good for you. You need alternatives. You need to attract money. And not only that, guaranteed you guys are not attracting the entire pool out there. If you think about it, one thing that we know in the Jobs Act, minorities have a better chance of raising capital. We know that already. The evidence is already there that minorities do better in raising capital using the Jobs Act. That's number one. Number two, we know women excel at raising money online from the crowd. They don't excel with venture capitalists. Isn't that interesting? See? So it goes to show you how the general public
Alex,
feels
you're on
about
mute.
others. And boom. Is he
I
still on
am.
mute?
Am I on mute still?
No, you're fine now.
No, you're good now.
I was being really clever. I can't remember what I was saying. I was saying I'm a minority. That's exciting.
I was going to say, we need to hire more women, Alex.
No, but this is okay.
It's the-
This is really exciting. So tell us a little bit more about how we can get into these types of exclusions.
Dark pool. Yeah.
Yeah, because
The dark pools are out, so democratization means inclusion. We're including everyone because that's what we want, right? We want to be able to go to the Hispanic community, to the Middle Eastern community, to the Asian community, all communities alike, and to say you have an equal chance to participate fully compliantly. And this is really the key thesis to everything I do, is fully compliant. So what David Weil did, he gave me the gospel, if you want to call it, and I've been one of the proponents of it, bringing it to the market. So what did we do? I needed to see 10 years ahead what was going to happen. So give you an example, 10 years ahead, I used to tell people, imagine a company with 1 million shareholders. They go, what are you talking about, Oscar? That's not possible. It will never happen. No private company. Okay, imagine for a moment. You couldn't, but you had to continue. So today, that imagination is reality. I tell people I have clients with 1 million shareholders. I tell people I have clients with 50,000 shareholders, and they're privately held. They go, how on earth is that? It shocks me to think that they would know technology. The tools are there. It's really, what are we talking about? A ledger, a CRM? It's not that, but in simple terms, that's what it is, but with all the regulatory elements. Inclusion allows you to use these regulations. And what we've done as a company, we've created an infrastructure because the regulators laid out the rules and they said you need A, B, C, D, E, F, G. And if you miss any of these things, we're not going to let you pass. So what do you need? You need a lawyer. Not just any lawyer. You need a lawyer who actually knows the regulations that can produce a product in a certain way. You need an auditor. You need an SEC transfer agent. You need a FINRA broker-dealer. You need the technology. You need all of these things to work in harmony in order for you to be able to go from here to here, boom. That's what we do. We created an infrastructure to do that, providing those tool sets and accessibility to all those participants. And the other thing that we needed to do was remove ourselves from the equation. What does that mean? The problem in the private markets, and the word private, is that so many pay me here, all these little micro payments. I'll give you that investor if you give me 1%, this and that, and if I give you that lead. All of that disappears in our ecosystem. We have an ecosystem where you have the lawyers, the auditors, everything's available to you at no fees. We wanted to make sure that democratization was never at the price of the investor. And people go, the investor doesn't pay. I said, please, people. If the company has no money and raises $5 million, I assure you, it's the investors paying. It's their money. That's the point. We want more money for the company to be able to build, innovate, hire people, and create jobs, which is what the Jobs Act is all about. So these regulations are here, and we needed to make sure we created an infrastructure that could glue them in multiple, meaning lots of broker-dealers and secondary ATS in order to facilitate this transaction. And underneath it, we build CoreChain. So we built 3-4 different companies along the way over the years to be part of the infrastructure. The last layer we created was the blockchain technology. CoreChain was built because what we saw 10 years ago was in order for all of this movement to occur, so I need you to visualize this for a moment. You can't right now because it would be a nightmare for you, but you have 40,000 shareholders, Joe Smith, and Joe Smith wants to sell his shares in a secondary market, which legally Joe can. And Joe goes to it, and he goes to the secondary market. The first thing the secondary market needs to do is validate whether Joe's real. That's number one. Number two, they need the old-fashioned way was paper trail back and forth and this. On the chain, it's all an immutable technology that we created. It's a private chain, which is the only one that's gone through the SEC. So that's the other thing that we did. Not only did we understand the nice technology glossing, no, we needed a technology that the SEC would qualify. So the word qualify is the term they use. What does the word qualify mean to us in the world we live in? Approved, meaning it can be used by companies in order to store their records and be able to issue tokens and all that. Why? Because fractionalization, whether it's real estate, art, music, whatever it is. So we build that entire infrastructure. Companies like you sit on top of it. And what's the glory of this? When something happens, it starts creating what we call a chain of trust. Oscar Jofre comes in, provides a KYC. That report that came in through LexisNexis, wherever it came from, inside the chain. It's embedded. Now it's an immutable. This is who you are. Oscar Jofre buys $10,000 worth of shares in your company. You can call it share, token, whatever it is. Boom, it's immutable. No matter whatever happens to you, no matter whatever happens to any of the two of you, from the company perspective, Oscar Jofre owns 10,000. That immutability ownership is always there. And whoever reads that information will always have the trust that it was done accordingly to the securities law. And that's the infrastructure we have built. That's the only way democratization can occur, is you need to have all the safety nets to protect both the investor, the company, and all the intermediaries involved. And there's lots, but it wasn't possible until technology. And that's what we built at CoreChain.
This is really exciting. So I'm imagining a situation where, let's say Aziz and I partner up with an operator and we have a $3 million building and we want to raise $1 million for that down payment and reserves. Is this something that's doable at a relatively small scale like that? Or is it something that's more, you threw out some numbers that were 5 million, you threw out some numbers that are 75 million, which is way bigger than anything Aziz and I have done so far. But is this something that can be done at a smaller scale?
Yeah, so I'll give you some example. Most of the people doing the real estate deals right now are young bucks who listen to guys like you and saying, okay, I'm going to partner with you guys, but I'm going to build a platform because they don't know this. So I'm going to, look, Regulation CF allows you to raise between 10,000, 5 million. So yes, you can use that regulation. What's really good about that? Accredited and non-accredited investors can participate and you can have unlimited of them. So in that scenario, you can say, hey, Aziz, after a year, you can transfer the shares to your uncle, You can sell it to them, to your aunt, and they could be, as long as they don't live in a sanctioned country, anywhere in the world. Look at what you've given C's, okay? So that's one option. Or you find 75 other projects like the one you have there, and you put them in what we call an LLC series. So you raise money under one company and you fund each of the projects. That's the other model. And again, same, the only difference between the Reg A and the Reg CF is the dollar amount, but the other piece is that it gives, the minute the investor invests in the company and gets approved and qualified by the broker-dealer and receives the securities in their dashboard, it's free trading, meaning that I invested on last week, today's Tuesday, oh, yeah, my investment has been approved, I'm on the cap table, here's my 1,000 shares. Okay, I'm gonna gift 500 there, I'm gonna sell these instantly. It has no effect on you, and it's updating your cap table real time. That's the beauty of this. I love December. It's December, it's the time of giving. We have one client invest $250,000 in a medtech company. And the reason this individual did it, he was an elderly, was to gift shares. He didn't want to give them money. He gifted them shares to his children. And he believed in the company so much that they wanted them to be there for the long haul. So 13 grandchildren got shares in this company. That's what I'm saying. Those things were not possible before. None of this was possible. So the imagination as to what you can do. So you're right. Up till now, you've only been looking for real estate projects for this because this has been your limit. Imagine when your limit isn't that anymore. What more could you do? And why? Because it's out there. We already know that. That means you're getting this spot, and while the other guys are taking the others because they know where to get it, right? Depending how big your large investment pool is. So imagine if your investment pool is 233 million Americans. And if you deliver that in Spanish, there's that. And you can deliver it in another language. The only thing that prevents anything is not imagination, it's the will to change the way you've been doing things. And when you do, you never go back.
This is really exciting.
Yeah, that's powerful.
Really exciting.
For you, because you're both in real estate, and I see it firsthand in real estate right now. I make some predictions, and my stuff usually comes up. I don't profit from it, but I'm going to tell you, real estate will be probably 80 to 90% of all the Reg A deals in the next 5 years. And the reason for that is because it's offering that same investor that you were giving today the opportunity to, whether they choose to or not, to have that liquidity, or monetization, but it doesn't put the pressure on you from doing anything. You don't need to do anything more than what you're doing. Keep building the portfolio, because if they do need to sell it, you want to make sure the person buying it sees the value in which you're building. That means they're the ones going to benefit. And this one day is going to, but if they need to, you don't have to drag it on, because it's horrible. You know what it's like. Oh, come on, Alex, I really need to get out. I'm in real big trouble with this. And you're like, I wish I could help you, but you can't. You do it for one, you got to do it for all. See, that's the Reg D rule, right? That's the other one. If you ever get involved, so if you can't find a buyer for them, then you're busy doing that and instead of running the business, right? So you've got to, this is democratization and helping us as innovators build our businesses without the ongoing concern of these other items. So it can work in harmony. Everybody is there. But I also find that the reason why people don't want to leave the entities is because they love the connectivity, because the company is connecting with them, talking to them, what they're doing day to day, and people go, but that's boring. No, it's not. If you've never participated before, it's not. Okay, for those who you've been making it here, yeah, I know, you're bored of that because you got that. But when you haven't had it before, it's different. And I think that's the part we need to understand. That 99% of the population have only been able to see it from the outside. All we see is, look at that, Tesla. If you would put in $1,000 before I went public, when he needed the money, it would have made you $500,000. How many more reminders do you need of that?
Very
No,
cool.
that's very true. Now, I will say,
So,
through the conversation, we touched a little bit upon what you're doing now and what your current company and business and what you call it venture does, but we haven't talked about it directly. Can you take a minute to just explain where you've reached now and what your company does in a little bit more specific detail?
yeah, so we're working with groups like yours to help you understand how to use the regulations, and then utilizing and providing you the technology to do it, and the technology connects you to the rest of the pieces you need. So basically taking two individuals who have a real interest in real estate, but I don't know how to do it and how to get started. So instead of something taking you a year, you can get up and going in less than 2-3 weeks, if not faster. Wow. So it's about speed, cost, and education. So we also are very big on educate. We believe that the more educated the audience is, the better it is. Democratization takes a while. It takes a while because, so people go, so anybody can, yes, anybody can use it, anybody can invest, but not everybody's ready. And what does that mean? If you're used to raising money with no accountability, then this is not for you. What does that mean? It means that if you're not used to being open and telling people what you're doing all the time, then don't do this, because there will be thousands of people wondering what's going on. You haven't done a news release, you haven't said anything yet. So you need to put yourself in another location. So maybe you are a private equity deal. And sometimes I tell people, you know what, you should go to private equity. Sounds like you want that. And go, no, I want, because I want my ownership. Okay, if you want to retain your ownership, it comes with responsibility. So if you go to this pile, they're going to take it from you. You got to make up your mind. You can't have your gravy and eat it too. If you want to get your valuation, because that's one of the other benefits of using these regulations, is that you get to go to the market with the value that you see it. The regulators don't say, hey, Alex, Aziz, you guys are nuts. That thing is not worth $100 million. There's no freaking, no, they say, let the market decide. Let the market make that decision. Okay, so when you go to private equity, they use all these different rules and so on. And it's not just the valuation, it's the controls and all that. Okay, that's fine. You deal with one, there it is. Here, you've got 10,000 shareholders. Okay, great, but they're not all on your board. So the only difference is that you have to be communicating with them, the frequency of communicating, providing updates, talking to them. Joe, Aziz, Henry, whatever they are. So that's part of the education we provide as well. So it's good to know the regulations are there and how to use them and what the pieces you need. The technology in order to make this thing happen, great. But you got to be ready as well as a company. And sometimes it takes a lot to be ready for it. Because you have to be ready for that opportunity. And there have been some really good home runs. One of our clients is called Brewdog. It could be real estate, it could be anything. It just so happens they're in the brewery industry. They're based out of London, UK. They had raised a little bit of money in London. But if you've ever been in London, it's every pub is a brewery. It's a microbrewery. And they got all funky names. So for them to stick out, it was really tough. So when they used the regulations, it was a learning curve, but they already had in their mentality that is, my customers buying my products or who want to drink my products could be the same people investing, and they harnessed that. This company flourished. It went from a company worth only millions now to billions, with less than a few hundred shareholders to over 1 million shareholders from 86 countries in the world. So anything is possible when you go all in, right? So that's what we do at Corcoran. So it is technology, but we need we're not there yet where it's a commodity just yet. Just like how we're talking today, the difference in the regulations, the pros and cons of each one, they all have their benefit. You just have to know how to use them. And can you use all three of them in conjunction with each other? The answer is yes. You can use a Reg CF and a Reg A and a Reg D all at the same time. Nobody's saying you can't. Just understanding the benefits of each one. And underneath it all is the technology. We're going to get to the point one day, not yet, we're going to get to the point where all of that will be self-explanatory, meaning that people will already know, and when they know, they go and look for it and buy it, and there it is. We're not there yet. But in the meantime, we educate. So our divisions are, we educate, one division of our business. A second division of our business is regulatory, providing the regulated components, the lawyers, the auditors, transfer agent. They're all third party. They're all partners of our ecosystem. And we train them as well. It's a training curve. And then, of course, making sure that here's the technology that you need to put together, and we provide it and get it ready for you. And it's an exciting journey.
Very exciting. Oscar, this has been really enlightening, really energizing, and I think I'll speak for Aziz and I, like one of the things that really got us excited about this whole world of apartment syndication when I first got into it was the idea of democratization. I didn't use that word, but it was the idea that I might not be able to come up with $1 million or $2 million to buy an apartment building, but I could come up with 50, and I can go ask friends, and I can give them this opportunity. And this seems like that on steroids, right? Like the opportunity to give to someone an opportunity to buy an apartment building and be part of that for $100, for whatever it is.
Isn't that powerful?
Very much in line with, I think, one of the things that Aziz and I want to achieve. And one of the things that we always meet up and we talk about our vision for what we're doing. And one of the things that's even more powerful than our income generating aspirations of owning a bunch of apartments and real estate and doing that, one of the things that this show is really all about is to make alternative investments the default. I want this to be the thing where if I get a job, some kid graduates from college and gets their first job, instead of putting all their money into a 401k in the stock market, I would love for this kind of thing to be the default, where everyone's just, oh yeah, you're not putting money into your Regulation A retirement account or whatever it might be. I would love that to allow people to be able to have the opportunity to invest in Main Street, right? Instead of all the GDP, like everyone in the entire workforce is out there working and just leaking money over to Wall Street and just letting them, hey, take it, go get rich off of it and give me the scraps. And
yeah, you're just getting you're getting the interest they earn by the money, keeping the money in the bank. You didn't get the return. That's not what you're getting. You're not getting the return, right? I think that's the most exciting thing about all this. And David Will, I'm going to come back to him as well because he's not done yet. Now that we see the evidence in minorities, he's really focused on that. And in particular, Black Americans, Hispanic women. He is so focused on the minorities because he sees it that we are the entrepreneurial spirit. See, this is the other thing. People forgot how America was made great. America was made great by immigrants coming in and starting opportunities because we didn't have all the jobs. It's when you go, no matter what country you go to, parents come in, kids go to school. What are parents doing? They're either running a restaurant, a janitorial service, this or that. A business is a business. It doesn't always have to be tech or real estate, but the important thing is that, and these generational wealth individuals have passed it on to their children and so on. We have a new generation of immigrants coming in now. Again, the numbers are so it's not going to change. So I think, and the ones that are here, so we need to give them the tools. We need to give them the tools so they don't need to go through what I and many others had to go through. Look, my journey, holy Jesus, 30 years. 30 years, it's tough freaking raising money. I've done most of my startups without raising money because nobody would give it to me. I'm not saying they didn't give it to me because I was Hispanic. I will never say that. That would be false because that would mean I read in, and that would be wrong. It just, I didn't know where to raise it, and the only sources that I knew weren't interested in what I did, and there it goes. There's the story. For me, when I got started and seeing companies, one of my most memorable stories, I love BrewDog. I think it's a wonderful example how it can work on a massive scale. But then there's this lady who only needed $50,000 to buy sewing machines to build dresses. That's just as impactful, right? That I look at that, I go, that's real. That's real jobs. Does it need to be multi-million? That's the other thing. We need to get this thing out of our heads. What is success? Success is not all unicorns. If we only create unicorns, that's not the end all. A company can be successful doing 10 million. I know venture capitalists call it leisure business. Okay, fine. Call it, but that's their category. But they contribute. Why? They create jobs, 30, 40 people employed, paying their income tax and all that. There are some amazing benefits, and we now have the tools to keep everything in line. And I think people just need to be educated, and they need to be educated correctly. And two, they need to understand that the regulations are also there to protect them. Yes, there's going to be people fraudulently, like anything else, taking advantage of things, but this is a fully regulated offering, which means that you will know if there's a broker-dealer because they have to put their name on it. You will know because it's a public disclosure document that people can see online. And so all of these things need to be there. So the safety guards are there. So if somebody's trying to scam this, you can't duplicate an SEC document. That's because it has to be the SEC link. Nobody's ever tried, because that, of all the bad things you could do, that's probably the worst one. But it's just exciting that companies get to have this opportunity, or the two of you do, especially because you're both like me. We're immigrants in a country, whether Canada or the United States, it's irrelevant. We're almost the same country anyway, which is nice. But but we're immigrants, and we want to build something for our children or build something for ourselves. And there's nothing wrong with saying I want to make money, and I should be able to do it even though I don't have all the connections. And that's what this does. You don't need connections to do this. The connections will come to you. It's ironically enough how money then starts, see, and I keep using that word because money is this thing that we put such a big spotlight on. And so what does it represent? It only represents what you want it to represent, but it can do so much for you if you start understanding you don't need to be an anchor to it, or you don't need to let it enslave. You need to understand it, how it works, and you need to understand that it's the real people that actually control the rest of the money. They just willingly gave it to this person here and not realizing what it was actually doing next. Now that we know, you have a choice.
Very powerful. Oscar, thank you. It's really a pleasure to meet you.
Definitely
One last
a
thing.
pleasure.
Do you have any contact information or ways that our audience can connect with you and learn more about what you do?
Yes, everything I've spoken about today, I have a free book. You can reach. I'm easy to find. My name is Oscar Jofre. I'm on LinkedIn, Twitter, Facebook. I'm easy to track. I don't turn down individuals, or you can reach me by email, oscar@corechain.io, and I can send you a book to provide very simple reading. Keep in mind, I'm an immigrant, right? So make things simple to read and to understand, more importantly, and so everybody can utilize.
Wonderful. Thank you so much.